So the next thing that's going to happen is we're going to get a sell-off wick that comes down here and then very clearly shows that this pattern everybody's trying to call out right here is not a wedge, it's not a triangle, whatever. It's a descending triangle because we're getting smashed down by the short moving average, and we're going to just keep basing to the downside here. So I would expect us to get another sell-off down to this 4,800 level, like, in probably in the next day or two, whatever, over the weekend, just to kind of test the bottom of this range again and essentially see, okay, we put in this low right here, we came up, we put in a high. All right, we came down, we put in a higher low. But is that the swing? No, probably not. Let's see what happens right here, because if this comes down here and we put in a lower low than this right here, it's going to look like we came in and put in a high, then we put in a low, and then this failed to get a new high right here, so we're coming down putting a new low, so it looks like we're starting a short-term downtrend or continuing the short-term downtrend. And again, this on the 4 hour, so if you start getting excited and you think, oh, this is it, we're about to jump up to the upside, let's go to the 1 hour and look at it. Look, we're still below the short time frame moving averages. So until we can get the red above the yellow and we're above both of those, you cannot even begin to think that we're in a short-term uptrend. You know what I mean? Once that happens, if we get above here, close, take out this parabolic SAR, get continuation, then we'll pop up to the green, then we'll pop up here and we can retest like the 6160 range or whatever and potentially try to take this high out and get a little bit of like more of a move to the upside. But at this point in time, until we start crossing those moving averages back to the upside on this is an hourly time frame, we have not, since that sell-off, even crossed them back up on the hourly, and that's our two short time frame moving averages. So like anybody that says they're bullish right now is just like trying to call the bottom. Like, just stop, man. Use technical analysis. Let the market tell you stuff. That's another thing too, is people would be, you hear this all the time, and this is how you know people are just like not looking at what the market's telling them. They're trying to see what they want to see is. You'll hear people go, let's see if we have any divergence, or let's see this, let's see that, let's see what the RSI is telling us, let's see what the Stokes are telling us, and they'll go between like 7 different time frames. Let's check the 1 hour, let's check the 2 hour, let's check the 6 hour, let's check the 12 hour. And they're looking for the market to tell them something. And if you look for something long enough, you will find what you want. You know what I mean? You will be biased. If you're already biased looking for something in that direction, you look on enough time frames, you're going to find it. You need to have certain time frames that you always check, and you need to have like certain indicators and certain like patterns or whatever it is that you're going to use, and then you use them consistently. You don't just say, let's see if there's divergence, and then flip through every time frame available on TradingView. Like, yeah, I bet you find divergence on one time frame. Like, get out of here. But anyway, crypto trend trader, we're taking a look at the charts here. I mean, there's no reason to think this is just all of a sudden like stop selling off. I mean, it's very realistic to think that we got a massive sell-off, we got a reaction rally to the upside, we got rejected by key moving averages, and we're not even close to reversing this trend. And by the time we do reverse the trend, it's going to be very obvious. It's not like it's just going to happen all of a sudden. So again, until we start on like the 4 hour time frame getting above that red moving average, there's no reason to think that this trend's bottoming out, because you're going to get a bunch of these green histogram wicks like this, and it's going to start looking good, and the slope is still red on this bad boy, and then bam, you get that massive sell-off like that. So all that is just like consolidation. It's resetting the oscillators before the next dump, because these things can't stay maxed out forever. Eventually, like, somebody pulls the trigger, with a decent size account, and we see like the short-term momentum start to reverse back up here, and then you see obviously it fades, because keep in mind that anybody that was in from up here during this massive dump like that is trapped. So every time we get to another key level on the way back up, there's going to be a ton of selling pressure coming in, because there's so many people that just want to get out of that position just to wait for the market to resolve. Because that's what happens when you get trapped on a massive dump like this, or a short gets trapped on a massive pump or whatever. All they're looking to do is just get out at even or a minimal loss, or in some cases just get out. So keep that in mind with a lot of this stuff here, and also with the altcoins as well. See how like we see the shift between like dominance and everything. So I have a feeling altcoins are going to get wrecked here very soon, and we'll see like the true capitulation event. As anything that's already putting in like all-time low right now, you should be out of that on any kind of bounce you can possibly get. And that's not financial advice, but I'm just saying, like, for me, if the markets are already looking weak you want to get out of the weakest assets. And you'll see like temporary bounces in some of the stronger assets as people are essentially like liquidating those positions and moving into something that's a little more stable, or they have a little bit more belief in. Because as like the exuberance in the markets gets like super high and people start branching out into like riskier and riskier things, as the euphoria really kicks in, you get super diversified and end up in a bunch of junk just because everything is winning. But then all of a sudden, when the markets start to reverse or whatever, you start consolidating that back into like strong or important or fundamentally like good assets, rather than just like looking at a chart. Well, I shouldn't even say that. It's realistically it's both. It depends on how you trade, how you invest. But even riskier assets, you're going to go to stuff like Bitcoin over like Tezos or something like that, for instance. So, but anyway, that's it. I'm just going to flip over real quick and take a look at the SPY chart. And, I have this on the 4 hour real quick here just to kind of show off basically what I was saying about these Fibonacci's is you can see when we topped out right here, I did the Fib down to that previous level down here, like the 2400 level when we came down and bottomed out. And you'll see we sold off all the way down to the 886 almost perfectly. But the whole way down, we were bouncing these Fib levels. We bounced the 0.5 back to the 236. Okay, we bounced the 618 back to the 0.5. Then we bounced down to the 886, and then we bounced that back almost to the 618 here. So think about that. We came down 1 Fib level, 2 Fib levels, 3 Fib levels. So down 3, up 1, up 2. Okay, and then we came down 1, down 2, down 3, and then up 1. So down 3, up 2, down 3, up 1, and then 1, 2, 3, and up 1, 2. So we went 3, 2, 3, 1, 3, 2. So what is going to tell you right now that we're bottoming out and we're not just going to come down here again, take out that low on the Fibonacci, and then potentially, take out this swing and start fibbing from like the next swing? Nothing. There's nothing in the charts that tells you should start getting bullish, that this isn't going to continue to sell off and get weaker and weaker and weaker. And now if we switch over to our longer time frame fibs here, let's go over to the weekly actually so we can see this just a little bit clearer. So the weekly fib I have down here is from like that $600 range from way back in 08 or 09 when we bottomed out down there. And you'll see when we sold off, that's the blue one here. When we sold off, we came down to the 236 and we basically confirmed that this is a potential like top out pattern, like retracement now. And then we're going to see what happens here, but I doubt we'll get back above the 236. I think what's going to happen next, we're going to come down and tag the 382. And you'll notice the 382 lines up perfectly with that previous low. So that's the 100% retrace. So at the 100% retrace and the 382, I think we could potentially see a legit reversal. And that would be at 2347, that previous low. And then, we could get like that double bottom reversal and then start potentially moving to the upside. That's our bullish case scenario, 382 retrace. But if that doesn't happen, we come down here, we could potentially bounce back up as high as the 2754 range, which is basically where we're at now, which we may be seeing that bounce, and then sell back off to the 382 or even as low as the 0.5, which is going to be $2,034 on the SPX. So just a little bit of a breakdown on the Wyckoff distribution with some Fibonacci's in place. And then obviously, from my video way back when, I was calling out that we could potentially come all the way down to the 618, which would put us in at $1,710. And I hope that that never happens, but in all reality, it is definitely a possibility, and it's important that we keep that in mind. As anything with potential or possibility, we need to keep in, realistic and see like what's the actual chance of that happening. And in all reality, like the 382 to 618 is like basically like the most common Fibonacci retracement zones and likelihood of a reversal, where people would find value based on like Fibonacci and Charles Dow theory for the 0.5. But anywhere in here we're going to start looking for a potential reversal. But once we come down to the 236, which we already did, we basically have told the market like, okay, we definitely topped out and we are going to be retracing. It's just a matter of how far. So no one knows at this point in time. The people on top are going to do everything they can to reverse this market and keep it moving back to the upside. And it's in the best interest of those in power, with the money with the wealth, with the politics, to maintain that power, wealth, politics, whatever, um, as long as they can, and keep the system in place as long as they can. So at this point in time, we just need to see if they are able to do that, or if the clock has run out and we're going to see an actual retracement and recession slash depression. Like markets are supposed to do. It's typically like part of the cycle. We've only just like extended that to abnormally long periods. Through like Federal Reserve and printing money and all this BS, zero rates and stuff. So, well, there you have it, crypto trend trader. I'm doing like a little bit of minimal videos this weekend. It is bad timing, but I do have family in town visiting, and like always, that's my priority. There's always money to be made, guys. Crypto trend trader, and I'm out of here.